Buy these growth stocks and watch your investments grow by sevenfold. I mean 7 times in the next 2 years. In this episode, I will tell you about the present and expected future performance of these valuable stocks. And then I like several other hidden potentials embedded in these assets. So stay tuned and then grab a cuppa. I mean a cup of tea, of course. Welcome to my channel. Time to subscribe. And then perhaps you want to ask me the meaning of growth stocks. No worries, I got your back. Okay, listen to Investopedia definition. You will get the clear picture. A growth stock is any share in a company that is anticipated to grow at a rate significantly above the average growth for the market. These stocks generally do not pay dividends. This is because the issuers of growth stocks are usually companies that want to reinvest any earnings they acquire to accelerate growth in short terms. So what does it mean for investors? If and when investors invest in these instruments, they should expect greater capital gains within the short period. Okay, without wasting most of your time, let me take you to the first on my list, and which is blink charging. And then the company business models centers around the design, manufactures, owns, and operate EV charging stations. Okay, that said, perhaps you want to ask me about the mode of this business, or if blink charging as a mode. Okay, you see, the term economic mode refers to a business ability to maintain competitive advantage to protect its long-term profits and market share from competitive firms. So yes, the company has a mode, which is the provision of charging station for EVs. Though there are several other charging stations springing up here and there, while Blink stands out with industrial leading equipment, robust network of public charging stations, and then the use of cloud-based software to operate and maintain stations. And then the question is this sustainable? In my opinion, the answer is yes. Why? Because with over 2 million EV vehicles in the US alone, there's a need for more charging stations. And then if you would like to know, EV is now the future of mobility. And in the recent interview with Fox News, Blink CEO Farkas said an estimated 30 million charging stations will be needed in the US by 2030. And then Blink Charging has more than 165,000 registered members as of today. Okay, let's quickly look at the performance in terms of returns. You see, Blink Charging announces third quarter and 9-month 2020 result. 9-month revenue grew 84% to 3.8 million during the COVID-19 economic, which exceeds full year 2019 total revenue of 2.8 million. 668 EV charging stations were sold, deployed, acquired across 25 states. Okay, that said, is this a good buy at this present price of 27.24? Well, in my opinion, I say yes. And given the ongoing performance, it has gained, well, in the past 6 months, it has 1,049.37%. So you should expect a 7 times growth within 2 years. Okay, next on my list is the Valentine. Let's have a look. And what is the business model rare here? I mean, for this company. Well, you see, Valentine business model is very unique. it focuses on one core product, which is data analysis. Perhaps you are thinking this sounds simple. Well, data analysis is not as simple as you imagine. Well, let me break it down. Well, let me ask you first if you are familiar with SQL, known as Structured Query Language. Well, I know most Microsoft certified system engineers should be familiar with SQL. You see, SQL is used to analyze data. Again, the learning curve can be very challenging. Hence, only few analysts can use the software very well. And then SQL could not handle large data. That's when Valentine comes in and fill in the gap. So you may like to ask me, how is Valentine resolving the problem? Okay, stay with me. You see, Valentine data analysis run on natural language querying, so ordinary people can easily use it. Consequently, it has opened up huge opportunities to get more eyes on important data. And then with Valentine, you can now handle very large data. Why? Because the software optimized for speed, both in runtime and then in iteration. These attributes position the software to be at a very unique advantage. A unique economic mode, if you like, which again translates into a greater competitive advantage. And then, if you like to know, Valentine as a software has the unique potential of a network effect. What do I mean? Let me explain. Well, you see, initially it was being used by FBI and CIA, and then presently many companies like banks, Morgan Stanley, Boeing, and individuals are now interested and now adopting the product within their system. Let's look at the performance. You see that Valentine has 52% revenue growth. Okay, Valentine's total revenue rose 52% year over year to 289.4 million during the third quarter of 2020, beating estimate by 10.1 million. And then it secured 3 major deals during the quarter. A 91 million contract with the US Army, a 36 million contract with National Institute of Health, and then 300 million contract renewal with an unnamed aerospace customer. And then at the current price of $27 during the production of these products and a projected price of $44, the question is this sustainable? Yes. In my opinion, I will remain bullish about this company. Just to let you know, Valentine revenue is sitting at $7.3 million and likely continue to grow. And if you want to ask me, why am I convinced about this company? Yeah, well, in the recent development, what I just told you, it has secured 3 major deals during the quarter. A 91 million contract with US Army, a 36 million contract with the National Institute of Health, and then several other contracts lined up. So Valentine is in a good position. Meanwhile, in my opinion, I will not be bothered much about Morgan Stanley's recent negative comments about the shares. So is it a buy for me? Yes. Because at this current momentum, the price of the stock will be 7-fold within 2 years. Alright. Next on my list is Arrival. Let's have a look at Arrival, which is EVica. You see, Arrival EV business model is based on new method of designing and production zero emission vehicles, EV if you like, using its proprietary hardware and software, robotic technologies, and then low-cost micro factories. What is the moat of this company? Well, the moat is in the production of EV vehicles. Buses, and vans. Let us examine the pros and then competitive advantage. You see, EV arrival has less competition in the production of commercial vehicles, except for the like of BYD. You see, this business is focused on production of buses and vans. Again, arrival is vertically integrated. What does it mean? Let me try to explain. Well, arrival vertical integration and a new method of production break the rules of economic of scale and create a strong unit economic for the whole arrival product portfolio, giving it strong competitive advantage. Again, it has the unique advantage of micro factories, meaning the models is easy to replicate within a limited space of 20,000 square meters. You see, the UK government is to ban sales of new diesel and gasoline cars by 2030 rather. And as such, Arrival EV is expected to profit from this policy. And the company has an extensive portfolio of intellectual property. The Arrival patent portfolio comprises of approximately 180 innovations which have been filed in various patent applications. Some of the 5 innovations are as follows: 11 fan innovations, 12 bus innovation, 13 vehicle innovations, 15 micro factory and vehicle design for flow innovations, and then 20 robotic related innovation, 24 battery related innovation. And then to let you know, the company has won a contract of $1.2 billion in orders of vehicles by UPS. Well, let's quickly look at the downside. You see, there is no revenue generated yet because the production of vehicles has not commenced fully until 2022 for the buses and then 2023 for the vans. However, the company, Arrival, has invested and built a factory in Bicester in the UK for the production of their vehicles. I will call that a positive step. And then it is expected to produce 10,000 vehicles per year. Okay, here is what you need to know about Arrival. Arrival will soon merge with CIIG Mega Corporation. What does it mean? And the impact. So to benefit from this merger, you will have to buy CIIC shares. Okay, here's the key. And again, in my opinion, and based on the pros, the advantage of the Arrival EV vehicle, I expect perhaps more than 7 times growth within 2 to 3 years. Do your research. And again, this is very crucial. The success of Arrival EV is in the hands of the management. They should initiate an effective portfolio management strategies to mitigate risks and uncertainties, weigh strengths and weaknesses, opportunities and threats across the full spectrum of all the Arrival electric vehicles. Okay, here comes the best part. Subscribe, like and comment. Remember, the goal is to generate wealth, build companies, and then create jobs. Bye now. See you soon.